All right, well, good. Hey, hello, everybody. It's been a while since being here, and again, I'm with my good friend Andy Gagliano from Gagliano Mortgage. Hey, Andy, how good you doing today?
Tony, I am well. How are you, sir?
I'm enjoying the weather. I'm enjoying this time, and I've been pretty busy. That's why we haven't been with you guys lately in a couple of weeks. It's been like 3 or 4 weeks almost. It's because either Andy or myself, and most of the time it's me. Uh, and he makes times. I get the last minute calls. We've been pretty much busy, and that's a good thing. It's busy good,
Yeah.
busy with buyers, busy with clients, dealing with hard deals and putting up on fires and stuff like that. So I cannot complain, not at all. And we're having an excellent weather, so loving it.
Yeah. Yeah. I
How
mean,
things your end, Andy? How busy you been?
we had a great April, very good April, and looks like May is shaping up to be good as well. I've got room for a couple of extra loans to close between now and the end of April and end of May. So, but
That's
not much
always a
room.
good thing.
Yeah, not much room though. So
No,
we're busy, and you know, I'm kind of like you. I can't complain.
exactly. So with the interest rates, really the way I see it, I haven't seen that much change. It fluctuate between 6.3, 6.9, and in between, up and
Yeah.
down like that. But really, I think it's going to stay like that for the longest time. I really don't see it coming down anytime soon. What do you think about that?
I tend to agree with you. We dipped down in that 6.5 range for a while, and then I love the term that some of the, I guess, the talking heads have given the period of time when the markets just went crazy about the tariffs. They call it a tariff tantrum.
Yeah.
And so I love that. I think it's really funny, but it 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 was a tantrum for the
It,
for the financial markets, and including the bond market, which is how mortgage rates are priced. And so yeah, we went from mid to low sixes to right above 7, and have kind of floated back down a little bit. Now we're right around 7%, a little bit under that for a 30-year fixed. Of course, a lot of that depends on credit score and terms of the loan and everything else. So there's a lot of conditions that go with that interest rate. But, you know, if somebody is looking to buy right now a primary residence, they're going to be just probably in the 7% to 7.5 range, just depending on what their circumstances are on a
correct.
30-year fixed. And, there's still really good rates. I mean,
Yeah.
it's a normal rate. And, I say it all the time when people say it to me, but I had somebody this weekend, a friend of mine, his son is looking to buy. And so his son said, well, what, what can I, how much money can I expect to borrow if my payment's going to be X number of dollars a month? And I gave him a ballpark number because that's what he was asking for. And he said, man, these interest rates are just so high. And I'm like, no, interest rates are normal. Interest rates are normal. Real estate prices, property taxes, homeowners insurance, those are at all-time highs. Interest rates are at normal levels, and we just have to have a hard reset in our minds of what is normal. And I'm not saying a 7% interest rate makes real estate prices at an all-time high, homeowners insurance rates at an all-time high, and property taxes at an all-time high.
Yeah.
That does not equate for an affordable mortgage payment, but it's where we are. I really don't see us ever getting back to that 3% range. I think people just need to hang that up and forget about it. If they were able to take advantage of it, hey, you took advantage of something that was once in our lifetimes, and be thankful that you got that opportunity.
Oh, most
But
definitely.
yeah, but now, time has moved on. Life has changed for a lot of us. We're having kids. Our kids are getting out of college. Spouses are passing away. We're getting divorced. We're just all sorts of things. Life is happening, and so we can't put off these big purchases like a home purchase just because we think interest rates are high. And we have to make the best of what we can make do with and move forward. And you know I think that a lot of people, and it sounds like this is true for you too, I think that a lot of people now have come to grips with, hey, I'm going to lose this 3% interest rate. I'm going to get something in that 6.5 to 7.5 range, and on my new house, and I'm going to live with it. I'm going to be okay with it. I'm going to move on. And so I think we're seeing that both in my business, and you're seeing it in your business as well.
Yes.
And so
Yeah, people start realizing certain things, I had a person that contacted me the other day, and we were talking about it, and she was like, there is no way I'm gonna downsize. She's by herself living in a 2,500 square foot home,
Mhm.
huge home just for her, you know, and elderly woman. And she's like, no, I'm not gonna sell. I'm not gonna buy me and downsize. Right now, I'm having a 2.5%. If you can guarantee me and you can get me a 2.5% interest rate, I'll sell it right away. And I'm like, can guarantee you nothing. The only thing I can guarantee you is that you're gonna die and you're gonna pay taxes. That's the only two things I can
That's right.
guarantee. And I run the numbers with her, and I told her, you got certain debt, an amount, and she got big debt. If you sold your house, she got a pretty good credit. That's what she said, and I believe it. Uh, she's good making her payments and everything every month. And I said, with the sale of this house, you can buy another house, downsize. You're gonna have a different interest rate, but after you pay all your debt, you're gonna be almost debt free. The only payment you're gonna have is your car insurance and your house. You're gonna be making less payment, less monthly payment than what you're making right now as an overall.
Yeah.
House payment, credit cards, car payment, all together. When you add it up, let's say in her case is somewhere around 3,500 a month. If she sell her house, downsize, get another house with a 6-7% interest rate, more or less we calculate her, and she pay off debts and the car and credit cards and all that, she probably gonna be having like a 2,200 a month payment. That's a saving,
Yeah.
between 500 and $700 a month that you're
Mhm.
gonna be saving.
Yeah.
So people, a lot of people start realizing, that it's the monthly payment, it's how much money is coming out of my pocket.
Right.
It's not much the interest rate. I mean, it's nice if I can get a 2.5, 3% interest rate, but
Sure.
reality is it's not going to happen.
Yeah.
I highly doubt it, that happen in the next 10 years. So we need to live with what we got. And at the end of the day, I tell everybody is if you can make your monthly payment, if it doesn't hurt you financially, let's take that step. Let's move forward. Let's do
Yeah.
it.
Yeah.
And it's not helping either that the fact that prices are not coming down. You know,
No, we've
That-
talked about that a lot. They're not going to come down.
no, the market is stabilizing right now, and even sellers, we are doing the transition from a seller's market to a buyer's market. And
Mhm.
you know, if people is being on the fence trying to sell for ABC reason, they should start, you know, really considering if they want to sell and they have to sell it now, because a lot of buyers are having purchase power right now. They asking for concession, they asking for repair, they asking for a lot of things, and if they don't get it, buyers really don't have a problem. If it's properly written, the contract, they don't have a problem withdrawing an offer.
Yeah.
You know, simple as that. And I seen that a lot here in the city of Hoover. The inventory has increased a lot. If you drive around Hoover, you're going to start seeing a lot real estate sign
Yes.
for sale. So it's a lot of competition. So what that's mean with the prices? Still licensed. They're not going to go up a lot because there's a lot of options.
Yeah.
So I don't know if you're seeing that on your end with the applications. You know.
Yeah. You know, I see it like you. I see it when I drive around. I see many more for sale signs than I've seen in the past. And as far as applications go, I noticed this at some point during last year. I can't remember when last year I really picked up on it, but every week Freddie Mac, and for those watching who you probably have heard of Fannie Mae. Freddie Mac is Fannie Mae's counterpart in the mortgage world. Those are conventional loans. If a loan is sold to Fannie Mae or Freddie Mac, that's a conventional loan. That is the loan that the vast majority of buyers get when it comes to mortgages or conventional loans. But every week, Freddie Mac releases their average interest rate for that week. And what I've noticed last year was if we went 3, 4, 5 weeks with that headline interest rate announcement saying rates rose this past week, mortgage rates rose this past week, mortgage rates went up again this past week. If we got 3, 4, 5 weeks of that, my business would slow down.
Yeah.
It would slow down a great deal. But the converse is true as well. If the uh, if we got the announcement that rates had gone down for 3 or 4 weeks in a row, then our activity picked up and people were calling wanting to get pre-approved. And so buyers are watching the interest rates.
Yes.
They're watching them very closely. And for sellers who are out there who need to sell, I think if no one's going to be able to time the market. You're not going to be able to watch the market and time it perfectly as a seller to say, now, I want to put my house on the market. Now, you're not going to get that.
No.
But if you get lucky enough to where you time it, where we've gotten 3 weeks, 4 weeks of those announcements recently, and then bam, your house goes on the market, I think you can see some increased activity on your home if it's priced right. I think there's a chance it will sell quickly. But again, the opposite's true. If you put your house on the market today and we've gone 3 weeks or 4 weeks of that announcement every week saying rates have gone up, rates have gone up, rates have gone up, I think you're going to find that there's fewer buyers out there in the market and that your house may sit for a little while. So, and here's the thing, it's just, it's one of the great things about a free market. For those sellers who have to sell, they're going to negotiate with a buyer. They're going to give those concessions like you were mentioning. They're going to come down in price a little bit. For those buyers who don't, or for those sellers who don't have to sell, they're likely to sit on their property for a little while and try to get the offer that they want.
Yeah.
So it's an interesting time. It is exactly what you said. It's that transition from going from a seller's market to a buyer's market, and we are somewhere in the middle right now, maybe leaning just a little bit towards a buyer's market.
Yeah. And that's what's going on here in Birmingham, Alabama, in certain areas of Birmingham, Alabama, cities like Hoover and all that. We're talking about the local market over here. We're not talking about nationwide because, each city, each market is totally different from the other one. Can you cannot take for granted what somebody said on TV about the market is crashing, because probably it's just crashing in LA, crashing in New York, but Tennessee right now, over there in Tennessee, the market is doing great. Houses are selling like hot potatoes, man, and the prices being up, really, really up. And same we are looking over here, and still Birmingham, Alabama, it's the hub for investors as well. I have a lot of out-of-state investors buying properties over here, as is fixing it and renting it, because rents are not coming down either. Rents went up.
Yeah.
Some property they are that depend really how realistic the rent they asking are sitting a little bit longer. Most of my clients, their homes been sitting there for like 45 days before they get a qualified renter. So it's changing. It's really really changing. We're looking that trend, and we're gonna be paying more attention about it, because we work with everybody, and the consumer is more educated now.
Yes.
Buyers are very very well educated now, and we have great mortgage brokers like Andy that sit with their clients and explain to them, hey, this is what's going on. Home insurance went up a lot. Car insurance went up a lot. And when it comes to home insurance, that makes a difference in your monthly payment. Sometimes you can get let's say a 5% interest rate, just for the heck of make an example of it. But if the insurance went up, your payment also is going to be up. So it's not going to be the same payment that whoever told you get a 5%, because that's what they got like 6-7 years ago, and they got this nice payment. They're not painting the whole picture.
Yeah.
At all. Property taxes went up. Insurance went up, like you mentioned. So that equation, that you have to add to the whole monthly payment. So I really think, Andy, if people is ready, if they can make the monthly payment, it's not going to hurt their pockets. They just start calling you and get qualified.
Yeah.
Simple as that. So Andy, what else you got to add to this conversation?
I'm going to throw one other thing out there and try to make it pretty quick. So this week, today is May the 5th. This week we have a Federal Reserve meeting, and the Federal Reserve is not expected to lower interest rates. But that might actually, their inaction might be a very good thing for mortgage rates. And we've talked about this before, so I just want to mention it one more time. And that is that the Federal Reserve does not set mortgage rates. Mortgage rates are determined by the bond markets. And so the bond market hates inflation. It's the enemy of bonds. And if the Federal Reserve lowers rates, that typically will drive some activity in the economy. It makes the economy improve. When the economy improves, that means that's usually a time when we have inflation. And so if the Federal Reserve does nothing to their interest rates, those are the rates that banks charge, or that the Federal Reserve charges banks on overnight loans. If the Federal Reserve does not lower their rates, it may help mortgage rates out this week, and we may see mortgage rates improve a little bit. So just keep an eye on that. We're just in a time where we're in tight rate range, and it's going to take something big to move rates out of that range, or it's going to take a long time, just like Tony said. Things have stabilized, and it's just, we're not going to see rates fall anytime very soon. So
that is correct. That is
drastically.
Drastically, exactly. Drastically. That's the key word over there. So,
yeah.
Well, Andy, thank you very much. I really appreciate
welcome.
that. It's good to see you again.
Yeah, good to see
People
you
need
too.
to learn and see how they qualify, or if they can qualify. How can they contact you, Andy?
Yeah, I can be reached at 205-979-4412. I'm at extension 1, and I'm glad to help. There's never a charge for a conversation. So feel free to give me a call and ask as many questions as you'd like. That's what I'm here for. How
There
about
you
you,
go,
Tony?
people. Well, after you talk to Andy and you get pre-qualified and we sure that you're ready to get into a home, we're going to start that searching for a house. Just give me a call, 205-370-3248. And, we're going to team up and we're going to make sure you get into a house and make it a home. And that's our goal, that you're going to be happy and satisfied. So, Andy, thank you again. And it's good to see you.
Good to see you,
Hope
Tony.
to see you next time pretty soon.
Yep, that sounds great. Have a great week.
You too. Take care.
All right. See ya. Bye.